Hey traders, welcome back to this week's weekly Forex forecast. Now last week was a bit of a strange week because we had the US government shutdown. It was non-farm payrolls week, but we didn't actually get non-farm payrolls. And that really leads us into one of the issues I have this week with the dollar pairs. As you see when we go through portfolio selection, the US dollar is quantitatively weak, but I actually prefer the pound pairs this week over the US dollar pairs, and I'll show you why in euro dollar. Now we did run into the major top in euro dollar and we kind of pulled back. But here is the issue going into next week with euro-dollar. So as many of you know, one of the things we're looking at each week is selling assets once they enter the sell zone because the odds of reversal are high each week, and buying assets when they go into the buy zone because the odds of a reversal from this zone back inside the range are high. Now, one of the keys around that is we don't really want to see very, very, very tight markets coiling into a potential breakout, because if you're selling into strength, in other words, something pushes higher, something rips higher, if you're selling rips or you're buying dips, in other words, you're buying into weakness, then one thing you really want to try and avoid is a potential reversal. And those potential reversals come when you get very, very tight ranges. And look at the range last week. Now, this may be a function of the, not having non-farm payrolls and the dollar pairs, maybe didn't really know what to do last week. But we had inside weeks in a number of these pairs. And the problem is when you get these kind of very, very tight coils after a kind of trending market or even a ranging market, it precedes, or it can precede, reversals and very big moves. So in terms of euro dollar next week, euro dollar really is a wait and see market. If you try and preempt the breakout and you get it wrong, you could be on the wrong side of it. I suspect the breakout is going to come to the downside based on the number of things we've been looking at. However, the best thing to look at in euro dollar next week, if you are trading it, would be above the 1.17786 and below the 1.1683. Anywhere in between here, we are just coiling and getting tighter and tighter. And these are the levels that, if they start to break next week, we can really see directional moves. So on balance, I'd prefer to look for a breakout to the downside. Perhaps this kind of thing next week, the market's kind of trending. It breaks, pulls back, and then looking for that move. And also, especially if this continues to kind of hold, it's kind of downward sloping. So we've got these kind of lower lows and lower highs. So that's one of the reasons why, on balance, I would prefer to trade that breakout to the downside because it's in line with the prevailing price action. So that's what I would look out for next week in euro dollar. But as you'll see when we go through the portfolio selection, I do think the US dollar pairs need some time. Better to let them break out next week instead of trying to jump in and fade the moves. And if they do break out, you could see quite strong moves. So you kind of need to be careful fading those US dollar pairs next week. Okay, so moving on to the portfolio selection, and the first thing to note here is the Japanese yen. The Japanese yen has moved to number 2 quantitatively in the Hedge Analytics platform. Now, this has been one of the best shorts, and in fact, I was looking to be short last week in the Japanese yen. And what happened? We got a reversal week. So, we start to see the Japanese yen, selling off. It bounces, we short it. It bounces, we're looking to short it. It bounces, we're looking to short it. And then it bounces, and it bounces to an extent that the quantitative data shifts and says, no, this is not an opportunity to sell the rally or sell the rip. This is probably the start of a trend change. And so we get this kind of move back to neutral. And now going into this week, I'm actually switching that bias. So, if I'm involved in any yen shorts, I'm not, but I was last week, I close those, I scratch those, or I take a loss if I have to on those, and then I switch to a long bias. So looking to be long the Japanese yen going into this week. The Swiss franc is still the #1 long, and also the Aussie. Now, what's kind of a little bit, makes me think this week about the Australian dollar, I much prefer the yen and the franc pairs because both of these are risk-off currencies, and the Aussie is actually a very risk-on currency. So I'm starting to question, especially as we have the New Zealand dollar and the CAD, the other two commodity currencies down here, very weak. Is the Aussie actually going to roll over? Are we starting to see a regime shift where we're going to get the risk-off currencies, the franc, the yen, and possibly the dollar moving this way? And that would actually see the Aussie going this way and starting to join the New Zealand and the CAD down here. The Aussie's only up there because, you know, we've had that big move up in gold, but you'll see at the end of the video where we look at gold, a very important signal to suggest that we are at a significant top in gold, you know, there or thereabouts. And that also makes me think we're likely close to a bottom in the dollar. So for those reasons, I am next week looking to be long the Aussie, but I'd be a little bit careful maybe with Aussie dollar. You know, I'd really like to be long the Aussie, maybe against some of the other commodity currencies. So that's what we'll be looking at to the long side. The currencies to the short side interest me more. We do have the New Zealand dollar with an interest rate decision next week. They're expected to cut rates. I would say that rate cut is definitely going to come. I'd be very surprised if it didn't. Why? Because we just had a very negative GDP print out of New Zealand dollar. Was expected to be minus 0.3, so 0.3. It came out at minus 0.9, so 3 times, you know, the actual amount that was expected in the data. So, you know, are we going to get a 50 basis point cut out of New Zealand? I would say that's, you know, that's definitely on the table, but remains to be seen. But certainly a 25 basis point cut. That's on Wednesday. So ideally, I'd like to be short the New Zealand dollar and maybe even short going into the RBNZ on Wednesday. That then leaves the US dollar, the CAD, or the pound. Well, we just discussed why, you know, maybe the Aussie could be over the next week or so coming this way and the dollar going that way. And again, you know, gold is really flashing a serious topping signal that we should be paying attention to. And again, we'll look at that as always at the end of the video, but that makes me kind of, you know, maybe you could short the dollar next week, perhaps, you know, and get away with it. But I feel like there could be a reversal coming in the dollar soon. So for me personally, it's going to be the CAD and the pound are the other two currencies I like to the short side. So at the top of my watch list going into next week, and the currency pairs we're going to be looking at in today's video, we're going to look at New Zealand franc to the downside, New Zealand yen to the downside, Aussie, New Zealand to the upside. We're also going to be looking at CAD franc to the downside, CAD yen to the downside, and Aussie CAD to the upside. And we're also going to be looking at pound franc to the downside, pound yen to the downside, and pound Aussie to the upside. Okay, so kicking off the watch list with crude oil, and crude oil is now down, you know, heading below $60 a barrel. And this is very kind of bearish overall for the global economy. Well, actually, crude oil coming down in and of itself is bullish because as it comes down, this is disinflation and this lowers prices. And as you lower prices, you can actually get that kind of Goldilocks economy, which is the best for, you know, equities, US equities, etc. However, if it's coming down because, you know, it's chicken and egg situation, if it's coming down because of a lack of demand because the economy is slowing, then you see the opposite. You see crude oil going down and stocks going down at the same time. So this is a bit of a warning sign as well, you know, in terms of risk off, in my opinion. And so I do want to be on the short side of this, but just pay attention to crude oil, because if crude oil is selling off because we're seeing a slowdown in the global economy, then this is going to be a significant risk off sign. Could very well lead to a top in US equities near term. So keep an eye on crude oil, but in terms of short-term trading, I would like to see this come back next week into the sell zone, which is the 64.16. And there is a high over here. Now, there's no real kind of highs over here, but you could draw this on as well, and then you get your kind of textbook right shoulder. So this would be the area, you know, the 64, you know, 30, 64.50 roughly. We breach the upper bound at the 64.16. We turn overbought during the week in a market I'm looking to be short. I can either be short or do nothing in this market. And this looks like a potential one way where we're starting to the downside. So any kind of pullback in this area, especially if we come all the way back up, you know, look for this to come back to the moving average, and then you can start to draw your counter trend line on. If it comes all the way back, if it counter trends all the way back into the left shoulder, this is where I'd be looking for a sell the rip opportunity. So it pushes in, turns overbought, looking to short this for 1 or 2 days from the left shoulder in the sell zone. If we start to trend back, however, and we fail to get there and instead you get the counter trend break, what you'll see is the moving average as it trends up will follow, and then it will follow back down like this. And that sets up a potential bear flag setup down to the profit taking zone next week in crude oil at the 57.21. So I can either be short this or do nothing. Buying this market is not an option for me next week. Okay, so kicking off the Forex universe with the New Zealand pairs, starting with my favorite pair, which is New Zealand franc. We did actually push into the weekly upper bound last week, and we started to sell off from that level. The weekly upper bound was in this area around here. somewhere up here, I believe it was. Came in, tested it, and this was the sell-off. So this is actually something we call a Monday, Tuesday reversal play. So with members, one of the things we look at is something tests a weekly upper bound. Usually, if it doesn't reverse, you know, that week, very often you get the reversal on the Monday or the Tuesday the following week, or even into Wednesday. You could call it Monday to Wednesday reversal play. So what that means is that we could actually, because this tested the weekly upper bound last week, we could very easily get the breakout to the downside. It's just something to bear in mind heading into next week. However, exactly the same, I would look at this as any other market. We're already above the moving average. So we're starting this kind of counter trend line back. You see how we kind of go above it and we start to trend back. So what I'll be looking for next week is maybe we push down first into here, and then you start to get this pull back. Look for this to counter trend trade into the upper bound, which sits at 0.4682. And if we trade into there, we're also going to trade into the top of the channel. Now, this would be an ideal place to start to look for the next leg down, and certainly for a 1 or 2 day reversal in this area. However, with the RBNZ on Wednesday, you know, is this going to push all the way up here? In a normal week, I would say maybe yes, but with the RBNZ on Wednesday, you know, Monday and Tuesday could just chop around like this. So keep an eye out for this. If you get the breakdown, you really want to see the breakdown come, or a breakout come after Wednesday. So ideally, if it pushes up into the top of the channel, you could look for that reversal before Wednesday. If it just moves sideways like this into Wednesday's meeting, that's when, and personally, I would primarily be looking for the breakout to the downside. You know, any kind of move to the upside, you could look at potentially shorting it, so you get a kind of volatility spike into the top of the channel, and you could look for the reversal if the actual event itself is kind of neutral, right? If they come out and they cut 25 basis points, and it's exactly what the market expects, and the RBNZ are a little bit hawkish, but not super hawkish, and as a result, you know, some of the shorts just book profits and you get a spike into the top of the channel after Wednesday, then you could also look for that reversal. But what I'd be concentrating on is this kind of sideways move into Wednesday. Maybe we kind of grind higher, and then a sell-off on the RBNZ. Once we get that sell-off, if we get that sell-off, you know, the moving average should follow it like this, and then you can look for that kind of follow-through bear flag opportunity after the initial sell-off on the RBNZ. So usually you move sideways into these meetings, you can get a big move, kind of consolidates for a bit as profit taking comes in, and that next leg down, that's where you get that kind of nice bear flag opportunity. So I can only be short New Zealand franc next week. Those are the setups I'd be looking for. So a kind of neutral outcome, and this starts to work its way to the top of the channel after Wednesday, or a breakout to the downside on the RBNZ itself. And I do personally think there's a good chance we could get a decent sell-off in the New Zealand dollar on Wednesday. We'll see. You know, these things can always, they have a way of producing unexpected moves, but I think there is a good chance we get a sell-off on Wednesday. It's certainly something I'll be looking out for, at least in the New Zealand bears. Moving on to New Zealand yen, this is a short or do nothing for me. I cannot buy this market next week. And we are trending to the downside, and we're just about holding lows. If we get, and I think this is definitely something that can happen on Wednesday, if we do get a kind of negative outcome from the RBNZ, the sell-off in New Zealand yen to the downside could be very, very sharp. I'm definitely going to be watching out for that next week. So what I'd like to see is we're back above the moving average here, which means we're attempting a kind of counter trend move. I'd like to see this continue to kind of counter trend into the RBNZ on Wednesday. Then I'll be looking for one of two things. Either we get a kind of nothing event, maybe they cut rates, and again, we just see a bit of profit taken, and this pushes into the upper bound above the 86.98. It turns overbought during the week. This high right here in the 4 hours is what I'd be looking at, the 87.18. This is where I'd look for a false breakout to the upside, and that's where I'd be looking to time a 1 or 2 day reversal, and that would also probably be the start of the next leg down. And once we break this low, I do think we could see quite a strong liquidation in this market. So that's what I'd be looking at post RBNZ. The other thing, of course, is, you know, the moving average comes up because we're counter trend trading like this. And when I say counter trend trading, I mean the market is trading this way. I'm not necessarily talking about trading it or taking a position in it, but the market begins to trade counter trend, and then you get the breakout on the RBNZ. The moving average follows it, and you can look for that pullback, that first pullback. That's your bear flag into the profit taking zone next week at the 84.98. Just bear in mind, when you have an interest rate decision or a big news catalyst, you can very easily get to gold levels. So if this does sell off and pulls back and there's a bear flag, this could easily do another 2 down to the gold level if you get a very bearish outcome from the RBNZ. So I can either be short or do nothing in this market next week, cannot buy this market next week. Next is Aussie New Zealand. Now this has been a buy quantitatively in HedgeDash for quite a while, and it's still a buy. So what I'd like to see next week, because we're below the moving average again, looking for this to continue to counter trend trade back into the RBNZ. If we get a kind of nothing event, you know, maybe they cut rates, but everything's as expected, and you just continue to see this after Wednesday come down. This is the area right here. This is a nice low at the 1.12243, where I'd be looking for a bounce back inside the range. So we're coordinating and we're using confluence between the buy zone, which is where even with nothing else, you start to see the odds of a bounce highly turn in your favor. And then if you combine it with key levels of support, this just increases your odds of a bounce or a reversal. So that's what I'm going to be looking for, you know, in the event that we get a kind of, you know, expected outcome, nothing too unexpected from the RBNZ. However, if we get a bearish outcome, which I do think is has a good chance of happening, then that's when you'd look for that breakout. You know, this will just counter trend during the week. The moving average will follow it. It will start to consolidate because you get some profit taking from the initial move, and that's your opportunity to step in. And again, I would be looking at least for the prior high, but if it's a very bearish outcome, there's no reason why the 1.14768, which is where we turn extremely overbought during the week, there's no reason though why that can't happen in a week where we have a big news event like the RBNZ. So that's what I'm going to be looking for. Can only be long this market next week or do nothing. Cannot short this market next week. Okay, so moving on to the CAD pairs, starting with CAD franc. Now, CAD franc is a short or do nothing. This is actually in a descending triangle type pattern because we came down, we tested it here, we bounced, and we're still making lower highs. It's actually very bearish. So the reason I've drawn this on here is because, you know, ideally I would be looking for a pullback into the upper bound at the 0.57404, and I will be looking for that next week. I mean, if this breaks through, if this consolidates and breaks through like this, back above the moving average, then I would be looking for a pullback into the 0.5750, this high over here. This is where I'd be looking for a 1 or 2 day reversal back inside the range. So I am going to be looking for that, but the reason I've drawn this on is because if the selling pressure is heavy enough to continue to make lower highs, then this is going to break like this. And as this breaks, this is where the moving average can already follow it, and you can look for the pullback and the test of the underside of the descending triangle, which is a bearish breakout pattern. As it pulls back and retests the underside, you'll probably see this test the moving average as well, and that sets up your bear flag pattern down into the 0.56510. I actually think we're probably going to see CAD franc come down for the rest of the month. So yes, I'm looking at short-term opportunities, a 2-day reversal from up here, from this high and above the weekly upper bound. Just clean this up a little bit. That is something I'm going to be looking at. So I'll take this off, and this will actually make it a little bit clearer because we can see the pattern already. But this would be the two things. You can almost look at it like this. If it breaks back above the moving average, you know, I'd be looking at a test of this area and a reversal from here, back in line with the overall trend. But if it breaks the low of this pattern, then you could look for the pullback into the moving average and the bottom of the pattern, and that would be your bear flag setup heading into next week. But I can only be short this market next week. CAD franc is a really good short opportunity over the next 4 weeks, in my opinion. Moving on to CAD yen. Now, CAD yen, guys, I'm going to bang the table on this one because this one is a really good setup. This likely has, based on the fact we're seeing crude oil breaking down, you know, sub $60 a barrel, this is going to weigh on the Canadian dollar. The Japanese yen looks like it's just about to start an uptrend after a significant reversal from the lows. And so you put those two things together, CAD yen to the downside is a very, very, very good market in terms of portfolio selection. And we're breaking out of this significant consolidation. This is a market that honestly can sell off quite hard. And I would really, really keep your eye on CAD yen, not just next week, but over the next 4 to 8 weeks. So If we zoom in a little bit here, this is what I'm going to be looking at specifically next week. I'd like to see this pull back. Ideally, trade above the moving average. And if we can come back and retest once again, this would be great. You know, back above the 106.84, we turned overbought during the week, and we have that confluence here for 1 or 2 days. Now, because we've tested this for a third test of a trend line, you can very often get a big sell-off. Coming back for a retest of the trend line here may actually be a little bit of an over ask. It may be a bit too much for this to do. So keep an eye around the moving average, because as this pulls back and possibly test the underside of here, if this starts to immediately fail back down below the moving average, this is where you can look for that kind of counter trend line break and that bear flag setup down to the 104.52 at least. But again, this is the start of a much bigger breakout by the looks of it. So this is a market, you know, if you want to short-term trade it multiple times, you know, over the next month or two, or you want to take a position, try and hold it, of course, your failure rate will go up. The longer you hold a trade, or the longer you hold trades, the higher the chances of the trade, you know, being wrong or moving against you. So all those things, you know, you have to work with, but ultimately, you know, CAD yen to the downside, keep an eye on this market. I'm banging the table over this one because I think this has significant downside coming up, you know, after this breakout of this consolidation zone. So that's what I'm going to be looking at in CAD yen next week. I can either be short or do nothing. Buying this market absolutely is not an option for me under any circumstances. And the final CAD pair is Aussie CAD. This is a buy or do nothing. And we could actually get the third touch of the trend line in this as well. That would be nice. So we come down, we test the trend line, and we turn oversold during the week below the 0.91276. So this is where I'm going to be looking next week for a 1 or 2 day reversal back to the upside. Again, you know, you get your moving average following it down as it counter trend trades, and then you get the breakout as well. So if we start to break out, so if we pull back, and I always like to, if I'm looking to be long in the week, you know, I always want to see it pull back. At least pull back, you know, form a counter trend move and then break out. Ideally pull back, you know, and buy the dip from the buy zone. But if this starts to pull back, that's your sign, that's your signal to start to get ready to look for a potential long opportunity. So if we are pulling back towards the lower bound, but we don't quite get there and you get the break beforehand, again, that's where you get your fast market. You get your bull flag set up into the upper bound at the 0.92756. This was actually a market that traded right into its upper bound at the end of the last week, and that was where it stopped. So if you bought this somewhere down here last week and you sold it at the weekly upper bound, you pretty much took the maximum you could have got out of that because it reversed from the upper bound. So it's not a short, but it is a profit-taking objective if you get there at the 0.92756. Okay, so wrapping up the Forex universe with the pound pairs before we move on to gold and silver, starting with pound franc. Now, pound franc is a short or do nothing. I would like to see this coming up, taking out the prior high and also trading into the sell zone above the 1.07944. In fact, last week, this rally up, where did it stop? Right at the weekly upper bound. This market rallied into the weekly upper bound, stopped, and reversed all the way back down. So I'm going to be looking for a similar move to the downside. Why? Because this is what you see in markets that are corrective. So if you have a kind of move to the downside and you've got a corrective waves are choppy. So every time they push up, they sell off. They push up, they sell off. So I'd like to see this push up again, trade above the 1.07944. And ideally, if we could take out this high, that would be perfect. This would be where I'd be looking for a 1 or 2 day reversal to the downside. If we start to push up and we've got this counter trend trade, you know, maybe we run into this high and then we start to break down. Back down below the moving average follows it. See how we pulled back into the moving average? We haven't broken below it. That would be your bear flag setup in this market down to the 1.06416. I can either be short or do nothing. Buying this market is not an option for me next week. Next is pound yen. I can either be short or do nothing in this market as well. Now, if we do pull back, we would be retesting the high. So the first thing I'd want to see is this break above the moving average, because once it breaks above the moving average, you know you're correcting, right? I mean, look at this here, breaks above the moving average, then it breaks down, consolidates, and then it sells off, pulls back. So it starts to pull back above here. You can look for the moving average to hold. If the moving average is holding, then you can look for this to come all the way back. Test the upper bound at 287, and I'd be looking for the prior high for a 1 or 2 day reversal to the downside. because we had this kind of head and shoulders reversal, it may be the case that we get a fast market. Fast market is where we don't manage to get all the way back up here. So it pulls back, trades above the moving average. It attempts to counter trend trade like this, and then breaks back down below. And in this scenario, you'll probably see something like this, and it'll be chopping like this, and you can put a trend line on as well, just like you can kind of put a trend line across here. And once this breaks down, the moving average follows it like this, and this is where you start to get into your kind of bear flag territory. So I'll be looking down towards the 196.62. This is the profit taking zone for next week. But again, downward sloping trend line, head and shoulders. This is something which usually indicates or precedes bigger sell-offs when you've got downward sloping head and shoulders, as opposed to upward sloping head and shoulders like this. Right? So the bigger moves come when you get downward sloping head and shoulders. Tend to get bigger moves when you see that, and same to the other side. So I can either be short or do nothing, cannot buy this market next week. And the final pound pair before we move on to gold and silver is pound Aussie. Now I do prefer the other pound pairs, pound Aussie to the downside. It is on my watch list, but I prefer pound franc, pound yen. We're already breaking above the moving average, so I'd like to see this come up, counter trend back into the upper bound at the 2.05752, and we have a nice 4-hour high just here. We also have a couple of highs just above it, so you can almost zone this off. But this is where I'm going to start to look for double top, head and shoulders pattern. I'm going to be looking in real time next week with GMT members for a reversal to the downside. If we start to make our way back and you get this kind of counter trend move, and then instead of testing the upper bound, it breaks out during the week, this is where you get your bear flag set up into the profit taking zone down at 2.0246. I can only be short this market, cannot buy it next week. Okay, so wrapping up the video with gold and silver, starting with gold, and look at the quantitative signal we have over here. Gold is now extremely overbought on a rolling monthly basis. Guys, this always precedes bigger reversals and significant tops. If we're overbought on a rolling monthly basis, extremely overbought. To give you an idea, the dollar peak, when the dollar actually peaked, its absolute peak during CPI rallying to 8.5% in the US, it was a peak after a reading of extremely overbought on a rolling monthly basis in HedgeDash. So the HedgeDash DXY quantitative data gave us an extremely overbought reading for the DXY right into that kind of 8.5% CPI print, and that was the major top, and we haven't actually been back to that top in the DXY yet. So we're now seeing that same quantitative signal that caused the significant top in the dollar multiple years ago now. We're seeing that in gold. So I'm not saying go out and short gold, but I would certainly be booking some profits on any gold positions that I had, any longer term gold positions. However, just bear in mind that a significant top is likely coming in gold, and we're probably going to need to correct 20%. Now, gold could continue to $5,000, $6,000, $10,000, after that, but the market needs to pause, needs to correct. So going into next week with that context in mind, I am still a long or do nothing in gold. I do not want to short gold in this kind of a run up, but if we come down, if we start to sell off really hard based on what we've just discussed, I might just step out and do nothing, right? I can be nothing as well. Doesn't have to be a long, can also be do nothing. So if this starts to come down and we see it corrective and it's kind of choppy, I will be looking below the 3798, 320 and these lows down here to potentially buy the dip, looking for a 1 or 2 day reversal in gold. If we start to roll over and we re-break back above the moving average, that gives you your bull flag setup. And the profit taking zone next week is the 3970.01. So could we rally? Could we even take out 4,000? Could we hit 4,000 and then peak? Definitely possible. Hence why I'm not saying short gold. But I would be very, very wary over the next 3 months with gold, because it does look like now quantitatively, so this is not opinion, this is quantitatively, we are seeing gold in an area where historically it has to pause and correct. This thing has to pause and correct. And as it does that, the dollar is likely to rise. As gold sells off, money will be coming back into the dollar. And this is one of the reasons why I'm still, hesitant of going on into those dollar short positions currently with gold where it is. So, and it's also why I think we could be seeing a significant bottom forming in the US dollar. So that's what I see in gold. Don't want to sell this market yet, but it does need to pause and correct. And I do think we could easily see 20% downside in gold before we start to see further upside. But for now, it's a buy or do nothing still, but cautiously looking for buy opportunities in gold. Okay, so wrapping up the video as always with silver. Now silver kind of has the same issue. It's not as overbought as gold, but it is overbought on a rolling monthly base now as well. So likely coming towards a near-term top somewhere. But these things can always go on a little bit longer than you expect. But certainly I am still long or do nothing in silver, but cautiously. Again, if it starts to sell off hard, you know, if we come in next week and it does this, you know, and it slams down into here, am I going to step into it? Maybe not. Maybe I'll leave it in that case, right? But if it kind of corrects down, if it looks choppy and corrective, and it hits these lows down here, then, especially if we start to lack momentum, then I might look for that 1 or 2 day reversal to the upside. If we do break down below the moving average and we start to counter trend, you can look for the re-break. Moving average follows it, and that would give you your bull flag into the next profit taking target to the upside, the 50.27. So again, I can be long or do nothing, but I'm cautious with longs in gold and silver at these levels. I really think we're into kind of profit taking territory on longer term positions in both of these metals. So that's what I see. Not against buying gold and silver at these levels, but I would do so cautiously. And I do think we're going to see, you know, 20% correction in the near future in gold. So that is it from me for today, guys. As always, I hope you enjoyed today's video. And if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.